As crypto markets recently put in a macro swing low, there are big hopes for a crypto recovery. Could it be that simple? What's up, everyone? Welcome to Crypto Capital Venture. Thank you for coming by. Let's jump into the video. This is Bitcoin chart on the 6 hour from that swing low, just for context, May 12th to where Bitcoin is right now. It's around a 20% bounce. Altcoins seeing a pretty substantial bounce on top of that, greater than 20%. And if you look, and let's actually start here too, because I get the same vibe, I think, as a lot of people out there right now. If you look at this zoomed out Bitcoin chart, and we look at the cycles of Bitcoin, and we look at on-chain metrics, and we look at even this momentum oscillator in this historically low area that has really put in bottoms, right? When we look at all this stuff, it's kind of like, all right, here we are again. We're in that territory of accumulation, and it's about to bounce. I think we are in the territory of a bottom forming. The volatility of this bottom is where things get tricky. And if we're looking for good news versus bad news here, I think the bad news is that the bottom and the bottom formation could be very volatile, and the bottom might not be fully in right now. The first phase of the bottom could be in, but we have a lot of different things going on right now that kind of makes where Bitcoin is, where crypto markets are right now, different than where it's ever been in any of these cycles. And we're going to dig into the chart a little bit on the Bitcoin charts to give a kind of a scenario of how this volatility might look. But I just, for a broader context to this video, I want to just kind of start here. This is really, in the simplest of terms, in a headline, what is really making things so unknown. And there are other things going on as well, but this is really a big piece of it. U.S. Fed board member says 75 bip rate hike on table in autumn. So now we're talking about even a larger interest rate hike, not even in the short term, like next month or something, which is obviously on the table, but going into fall, right? So this is more of an extended outlook. This is more of an extended negative speculation. Comment comes as U.S. faces highest inflation in around 4 decades. So this is a piece of the bad news, which is to say this narrative around raising interest rates and how that's going to affect the economy and affect traditional markets and crypto, it's kind of just getting started, right? So we already have to accept the volatility that is here and is probably here to stay for the remainder of the year. Now, the other piece of bad news is this, and I say this in pretty much every video that I do, and I say these videos are not financial advice at all. This is me tracking markets with you. I'm tracking the data with you, but I say all the time, I have no idea what's going to happen. And we use the data to try and get a roadmap and a guide, but I have no clue. And the bad news is this: nobody in this world has a clue. Even the most exceptional analysts and these people that you see on the news all the time doing interviews, they have no clue how Fed rate hikes could impact stocks, crypto, and other investments. This is from end of April, but it's a good article to illustrate my point. Will rising rates and inflation derail stocks in 2022? So a couple points here. Rising interest rates will always trigger a period of stock market volatility. Dan Rahu, CEO of Tradier, a brokerage platform. I probably butchered both names. Apologies. The fact that the Fed has indicated multiple increases means that we are going to have a year of continued volatility. That's something we all know. If you're in crypto, even before all of this started, this is something we've already been prepared for. Volatility across the board. Bull market, bear market, whatever. There's just crazy swings in these markets. Historical data and trends of the NASDAQ, Dow, and S&P 500 show that the market tends to recover in about 3 weeks. But market watchers are divided as to whether the Fed will do too much or too little, and whether that's already priced into stocks. This uncertainty itself drives volatility in the market. So that's the thing. There are people that are saying, hey, what's going to happen this year with interest rates going up is priced in. It's priced in. We got the downtrend. We got the correction. Here's S&P 500. It's up today. That's nice to see. That's likely a big reason why crypto is kind of starting the day in green. But remember, we're in this longer term downtrend. This is a 6-hour chart, but this is going back all the way to January. Traditional markets have a lot to do in terms of turning this around as well, bottoming out as well. And then if we go back here to this article, elevated volatility tells us that there's a fair degree of pessimism already baked into the markets. That's kind of good news. It's kind of like, all right, the Band-Aid is ripped off, the worst might be over, and then it goes to the bad news. This doesn't eliminate the possibility for further near-term weakness, right? So bad news. So it's like good news, all right, some hope there, bad news. And check this out. But it does tell us that a good portion of the risks are already reflected in the current stock market correction. It's like good news, bad news, good news. It's however you want to look at this. You can kind of draw whatever conclusion you want. Here's another piece. Higher rates will, in our view, drive lower valuations, but we think, so bad news, this is going to drive lower valuations, everybody. But we think earnings growth will remain sufficiently positive to support positive but more moderate stock market gains this year. So valuations are probably going to get driven down, but there's probably going to be stock market gains this year because of good earnings growth. So this is this exemplifies perfectly the point that nobody knows what's going to happen. And because of that, I think there's a really strong case for the bottom being in, but the formation of that bottom being kind of extended and extremely volatile. A really good example, if we just look at the Bitcoin chart on the weekly, to just something to anticipate and speculate on, is this. If we look at the chart, I think it is clear we are bottoming. This could go on for months, but it's clear we're bottoming. But just because we're in this vicinity, right, we can look at when Bitcoin was in this momentum oscillator, and let me move this over so you can see the slower moving momentum oscillator kind of approaching oversold in these previous cycle bottoms. So let's go back here, and I just want to note something. When Bitcoin, right here, and this was October of 2000, when was this? I'm sorry, this was October of 2014. When Bitcoin got and you can see here, this 20-week moving average crossing below the 50-week moving average, right? Just a really big downturn right here, right after. You can see how it just pulled back to that 20-week moving average, and then it finally put in the low, right? So this was kind of the beginning of a bottom formation. It needed one more capitulation lower low after the 20-week moving average crossing below the 50-week moving average. So here we are, 20-week moving average crossing below the 50-week moving average, pretty fresh in our minds. We get this low, and it's kind of like, well, check this out. If we're looking at Bitcoin on this oscillator, right, you can see Bitcoin put in this first low, and then it put in a lower low right here. And so let me just open this up so we can see this a bit more clearly. So it's kind of like Bitcoin put in this low that we just put in, and we might get this rally. We might get this pop to the upside. Equity markets might get a pop to the upside before one more bottom formation swing low. And you can just see Bitcoin back then, after getting that swing low, did get pulled back into the 20-week moving average. So there's a case where it's been really, really insanely red on these Bitcoin charts all year long. And just look at this. This is a weekly chart, everybody. Look at the downside. There's a very strong case we get at least a relief rally. So Bitcoin right around 30,000 right now, a relief rally to the 20-week moving average around 40,000 could give gains of around 20 to 30% for Bitcoin before continuing some downtrend as cryptos go into the later part of next year. Who knows if they're going to be doing things like this, raising rates this much in fall. Who knows, right? If they will, first off, but how that will impact markets in general. Could that be the catalyst for one more big sell-off? But listen, this is all speculation, but that's my point of this video. It's the good news versus the bad news. The good news on this chart is the chart itself. Bitcoin is in an uptrend. Bitcoin is likely putting in its bottom formation. The bad news is that bottom formation might take some time to play out. And with it, there could be some extreme volatility. There could be more downside. And with that, nobody knows how it's going to play out. So as always, I do these videos and I track this because we anticipate what is in store for cryptos. I will say, as we are anticipating and utilizing all of this data and on-chain metrics and everything in terms of Bitcoin and crypto markets in general, I will say this: crypto markets present opportunities in environments like this. And this is why I do these videos, to track these opportunities, to be cautious amidst these opportunities. But there's way more opportunity, in my view, in my opinion, here than there is up here or all the way back here on this chart up here. So this is a reminder we really need to tell ourselves all of the time, but we have to continue tracking just all of the markets in general and continue tracking this new storyline, because Bitcoin is in this environment now that it's never been on the weekly chart, with this overlap of the negative sentiment in traditional markets. And this really never been here before at this scale, right? We know the COVID swing low, we know the 2018 correction and everything, but it's like Bitcoin wasn't here, trading through that 2008 market crash that we saw. And we could be in kind of a more macro consolidation event like that. We might not be, but we might be. And we have to really monitor crypto markets in an environment like that, because it's really not been in an environment like that just yet. So this is what we'll track. This is Bitcoin on the long term in this uptrend. Appreciate all of you cruising by. Let me know your thoughts in the comments below. I'll see you in the next video. God bless.